So has transparency killed the middleman? Every trade leaves a trail, and for years that trail has been a queue. A queue to confirm, a queue to reconcile, a queue to clear. Different systems, different standards, different teams, all holding fragments of the same trade, all waiting on each other to sync what everyone already knows. That's not complexity, that's latency. And latency is the hidden tax on every deal we do. Blockchain doesn't just record the trail, it removes it. Okay, smart contracts clear the queue the moment the trade is executed. No waiting for bilateral confirms to flow through a dozen systems. No reconciliations or T plus something bottlenecks. Everything matches instantly because everyone's looking at the same ledger. Each cargo, molecule, or megawatt becomes a digital twin, tracked, verified, and financed the moment it moves. Tokenization turns inventory into collateral, receivables into yield, and transparency into an asset class. Compliance isn't a department anymore, it's a code. Governance isn't a meeting, it's a logic. When every transaction, shipment, and payment lives on-chain, risk stops becoming a number in a report. It becomes visible, live, measurable. The trading houses of the future won't run on ERP systems or spreadsheets. They'll run on ledgers, connected, permissioned, and auditable in real time. A trader won't book a deal, they'll mint it. A counterparty won't settle, they'll validate. And because the balance sheet now lives on chain, capital becomes fluid. A tokenized cargo can be fractionally owned, financed, and hedged before it even reaches the port. Liquidity no longer waits for the asset, it moves with the asset. That's how tech eats trading from the inside out. When the ledger becomes the market, middlemen don't get replaced, they get erased. Margin calls become code, and transparency stops being a slogan. It becomes a standard. What's left is speed. Markets that clear themselves, contracts that execute the moment they're agreed, assets that don't just move, they transact themselves. And when that happens, the question won't be who trades best. It will be who needs permission to trade at all. But with all of this to happen, you need a bit of a shake-up in the C-suite. Because some C-suites, right now in commodity trading houses, seems like time has forgotten them. Because every revolution starts with denial. And right now, denial lives in the boardroom. Most trading firms still believe leadership equals hierarchy. That control scales with a number of people reporting to you. That might have worked when information moved on paper, but not when information moves at machine speed. The old generals of the C-suite, the empire builders, the meeting makers were trained for coordination, not automation. Their power came from managing people, not systems. That leverage is gone. AI doesn't wait for sign-off. It doesn't need a steering committee. It just executes. The new managers aren't politicians. They're engineers who understand both capital and code. They won't climb org charts. They'll just delete them. The next generation of leaders will speak 3 languages fluently: finance, logistics, and Python. Their job won't be to approve risk. It'll be to architect risk. Trading companies used to worship experience. Now the economy worships iteration. The fastest learner wins, not the longest survivor. The culture that once prized intuition and secrecy are being replaced by transparency and speed. And for many, that won't feel like transformation. It will feel like humiliation. Because the moment the code starts running the company, there's nowhere left to hide. Especially for those managers who've perfected the art of looking busy. Titles stop mattering, outputs become everything. And the quietest room in the building, where the biggest decisions used to be made, the boardroom. Leadership isn't about authority anymore. It's about awareness. The ability to see what's coming, adapt before it hits, and move faster than the politics around you. The firm that survives won't be the biggest. They'll be the ones that move first, before they're told to. So, the next great trading house won't smell like oil, or coal, or grain, or gas. It won't smell like anything at all, because the next generation of commodity firms won't be built on physical floors. They'll be built in digital frameworks. The terminals, the risk reports, the reconciliation, all of it will dissolve into infrastructure. The modern trading house won't look like a company anymore. It will look like a network, a mesh of ledgers, contracts, and algorithms bound together by trustless code. And this isn't a prediction, by the way, it's a trajectory. Because I know. I've lived in both worlds. I've co-founded the first blockchain commodity platforms back in 2016 when nobody in the industry even knew what blockchain was. Since then, I spent the last decade deep diving, reading over 300 white papers on disruptive technology from stablecoins and digital finance. I understand not just how crypto has evolved, but how it now converges into something far bigger, the tokenization of real-world assets. Because once commodities, cargoes, and capital move on chain, you won't just digitize markets, you'll redefine them.